Thank you, operator, and thank you everyone for taking the time to join us on today's investor call. This is Henry Albrecht, CEO of Limeade, and I'm pleased to provide all of you with an overview of our operating and financial results for the year just ended 31 December 2019. Joining me on the call today is Toby Davis, Chief Financial Officer for Limeade, who will be walking you through our financial performance for the year. As we move to slide 1, I draw your attention to some important notices and disclaimers for today's call, and slide 2 is the agenda that we will be covering today. Thank you. Turning now to slide 3, our 2019 operational highlights. The biggest highlight for Limeade in 2019 was the listing on ASX that raised $100 million Australian in December 2019. That might be the last time we use Australian dollars, as we are, you may tell by the accent, an American company, and we'll be reporting the rest of the discussion in US dollars. We'll try to be clear about that throughout. During the year, Limeade was once again recognized for its own culture as a great place to work, which is something we take seriously and are very proud of. In fact, it's core to our business. Our global workforce also increased materially by 18% to 258 persons at the end of the year. With a great team and strong culture, we also signed 30 new customers, including 23 new direct enterprise contracts across 7 industries. We continue to innovate and develop our employee experience platform and solutions throughout the year, delivering 18 major platform initiatives and launched 100 product enhancements. As a responsible organization, we take our cultural and ESG obligations very seriously. We've been focused on board and employee diversity and inclusion, employee well-being, engagement, and of course, performance. Moving on to slide 4. Company overview. Limeade provides employee experience solutions that are designed to improve organizational culture, employee well-being, and engagement to deliver quantifiable business results, or ROI, return on investment, for our customers. Our dedicated employees are located across 3 countries, the United States, Canada, and Germany, and we currently serve over 2.6 million users of the Limeade platform globally, primarily in large enterprises, also some medium enterprises that operate across a diverse range of industries. And we've invested over $77 million in the science and data-driven integrated employee experience platform, the technology itself, since our inception in 2006. Moving on to slide 5, our value proposition. The Limeade platform is an integrated employee experience solution that helps organizations solve a number of critical employee challenges. Attracting and retaining talent. Our own Limeade Institute analysis from customer data has shown a 3 times higher turnover for employees who do not participate in Limeade solutions. Employee engagement, a single access point for all HR and benefits services and solutions. And finally, our solutions measurably improve employee well-being, supporting the whole person. Moving on to slide 6, the Limeade solution. Our core offering on the integrated Limeade platform is Limeade Wellbeing, which seeks to improve the physical, emotional, financial, and work well-being or wellness with the support of the whole company and the whole ecosystem of other benefits and solutions. Sales of the Wellbeing solution accounted for over 90% of FY19 revenue and affords us significant new customer and expansion opportunities. Our engagement and inclusion solutions were launched in 2018, with each providing a range of new customer and upsell opportunities, and our advanced communications capabilities support everything we do, as communications is essential to building a great connection with your workforce. Moving to slide 7, employee experience market opportunity. Investors can see that the employee experience software market is large and growing, with a global market in excess of $18 billion, of which 50% resides in the U.S. The market is trending towards software solutions and away from human services-based solutions in this market, and our business model is based on software as a service, or SaaS. In 2019, 96% of our revenues were recurring in nature. Moving to slide 8, we have a diversified blue-chip customer base. We serve customers with anywhere from a few hundred or a few thousand to a couple 100,000 employees. We have minimal reliance on any single customer or industry, as evidenced by the pie charts shown. No industry contributes more than 25% by CAR, which is our term contracted annual recurring revenue. CAR represents the total value of contracted subscription revenue at a point in time, expressed on an annualized basis. Our number one customer contributed 10% of 2019 CAR, with customers outside the top 5 contributing more than 75% of the CAR balance. Finally, over 75% of our customers have over 10,000 employees, which forms part of our group strategy to target large enterprise organizations with our unique Limeade offerings. Thank you. I'll rejoin again in a minute, and right now turn it over to Toby Davis, our Chief Financial Officer, who will go over the 2019 Limeade financial results in more detail.
Thank you, Henry. Slide 10 provides a snapshot of our financial highlights for the year. We ended the year with CAR of $57.1 million, which was up 20% on the prior corresponding period. Revenue was $47.4 million, up 1% compared to the prospectus and up 18% compared to fiscal year 2018. Our pro forma EBITDA loss of $2.1 million improved by $1.4 million compared to the prior corresponding period and beat prospectus forecast by $2.7 million. The improvement in EBITDA loss is due to an increase in revenue and also lower costs associated with headcount. As Henry mentioned earlier, we ended the year with 258 employees versus a forecast of 281. The difference was also consistent in our pro forma net loss after tax and operating cash flow versus prospectus. Additionally, gross margins ended fiscal year 19 at 76.6%, which was up 3% on fiscal year 18 and exceeded the prospectus forecast by over 1%. Turning to slide 11, the lifetime value to customer acquisition costs, or LTV to CAC ratios, ended the year at 5.7 in fiscal 19, which is consistent with prior year 18. This ratio was lower than the September 30th ratio presented in the prospectus due to the variability in the LTV formula, as a material current customer signed in December 2018 is no longer in the 12-month rolling calculation of LTV. However, Limeade plans to maintain our LTV to CAC ratio by increasing the LTV of customers, reducing gross CAR churn, and driving scale and CAC through investments in sales and marketing teams. We recorded solid growth in new customer acquisitions with 30 new customers signed during the year. The fourth quarter was in line with seasonality expectations, closing 13 new customers, including a leading enterprise customer that is a global supplier of technology and services. Our recurring revenue represents 96% of total revenue recorded in fiscal 19 and was in line with prospectus forecasts. And our net revenue retention, or NRR, was 97%, in line with prospectus forecasts, and down 1% on the prior period of 98%. Limeade values long-term customer relationships and continues to offer new features, solutions, and global capabilities to our diverse customer base. The Limeade customer success team continues to focus on delighting our customers and delivering innovative solutions. We also continue to see an increase in both our average CAR per customer and average CAR per direct well-being customer. This is driven by our investments in technology and infrastructure that allows us to serve large global customers throughout the world. Turning to slide 12, Limeade has a long history of maintaining strong and consistent growth, predominantly with U.S.-based customers, and we've invested in a range of growth accelerators. The CAR growth in fiscal 19 reflects organic growth attributed to new customer acquisitions, existing customer upsells and expansions, and partially offset by customer churn. Our CAR has a compounded annual growth rate of 25% since fiscal 14, driven by our focus on higher value customers, higher proportion of enterprise customers, and industry diversification. We'll move on to slide 13. Slide 13 shows a bridge between 31 December 18 and 31 December 19 CAR. Additions to fiscal year 19 CAR grew 33% from new customer acquisitions of 10.8 million and existing customer upsell and expansions of 4.9 million. Gross car churn measured as a percentage of CAR was 13% for the year. Overall, the net impact at year-end was an increased CAR of 20% from prior period. It's important for our shareholders to understand the dynamics of our business a little bit more as this impacts our CAR. The Limeade sales cycle is approximately 12 months, and large enterprise contracts are typically awarded in the second half of the calendar year, with services launching typically in the following year, counting as revenue. However, customers can provide notice of termination at any point throughout a calendar year, and we record that churn in a conservative manner by reducing CAR when the customer provides notice of termination, even though the customer has a future contractual obligation. We continue to delight our customers with our dedicated customer success team, whose role is to maximize retention and deliver value, along with providing thought leadership and research of best practices driven by our science and research conducted through the Limeade Institute. We continue to focus on organic growth in CAR via new customer acquisitions, existing customer expansion, and upsell opportunities, along with reducing CAR churn. Moving on to slide 14. This shows our major operating expense items, research and development, and sales and marketing. As Henry mentioned, Limeade has invested over $77 million in R&D since the company's inception of 2006. Our total R&D investment spend was $17.2 million in fiscal 19, and was mainly driven by headcount expansion to further enhance our solutions, integration capabilities, and user interface of the Limeade platform. We've continued to also strategically make investments in sales and marketing. We have over 70 staff in sales and marketing functions across the U.S., Germany, and Canada. Accordingly, and per our plan stated in the prospectus, the sales and marketing expense grew 36% to $15.7 million, driven by headcount expansion along with the allocation of a portion of the customer success team's expense based on their increasing role of upselling and expanding our customer install base. Moving on to slide 15, I will not spend too much time on the next couple of slides except to point out that we continue to maintain a very disciplined and balanced approach in managing the business and our growth. Revenue, gross margins, EBITDA, and net loss after tax were all ahead of prospectus targets, and as mentioned, the smaller EBITDA loss was driven by higher sales and the timing impact of headcount expansion. On slide 16, our cash flows show that we delivered a positive operating cash flow of $1.4 million, well ahead of the prospectus, resulting from lower EBITDA loss, partially offset by a $1.8 million change in working capital versus prospectus forecast. Negative free cash flows of $1.7 million versus negative $3.4 million prospectus forecast resulted from lower capitalized development costs and other capital expenditures as indicated. Slide 17 shows the 31 December balance sheet, with Limeade ending the fiscal year 19 with $32 million in cash resulting from the IPO on ASX and no debt on our balance sheet. I'd like to now turn the call back over to Henry, who will be able to update you on the Limeade strategy and outlook.
Thanks, Toby. Slide 19 is focused on our growth strategies. Our 4-point growth strategy starts with new customer acquisition, both in the U.S., North America, and EMEA and the rest of the world. So acquiring new customers is something that we've invested heavily in and will continue to do so. Expansions and upsells within the existing customer bases. We have more than one solution to sell our customers, most of whom have our core well-being solution, as well as expanding to global populations that we did not necessarily include in the original launch with those customers. Third is expanding the platform offering, just continuing to innovate. Limeade is viewed as an innovation leader, and we continue to invest in both platform and solution innovation. And lastly, we are always open and exploring opportunities to grow through inorganic growth, through mergers and acquisitions with complementary technology solutions, skilled employees, aligned cultures, and opportunities to show accretive financial results. Moving on to slide 20, just to talk briefly about our outlook. I think the simplest, clearest way to say it is we reaffirm our prospective forecast for revenue, EBITDA, and NPAT. Our mission and purpose remains the same, elevating the employee experience for the largest companies in the world, leveraging core data and science expertise relating to well-being and employee engagement. And I do want to promote our Limeade Engage conference. Right as of today, this is the largest and best attended conference we expect in our company's history, and it starts 30th of March in San Diego, California. So again, financial discipline focus and reaffirming all the numbers we shared in the prospectus. Moving on to slide 21. I would say that in addition to reaffirming our guidance on revenue, EBITDA, and net loss after tax, just want to provide some market commentary. We know it's a volatile world and market we live in, and the world faces challenges and risks that are natural, environmental, cultural, social, geopolitical, and having real-time mobile communications capabilities, such as those provided by Limeade and the Limeade platform, can help some of the biggest and best companies in the world show care in turbulent times. So thank you very much for your time. And I would now like to hand it over to the operator for the question and answer session. This concludes the formal presentation.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson of Macquarie Group. Please go ahead.
Hi, gentlemen. Thanks for taking my questions. Just particularly on slide 13, I mean, it's good to see, obviously, a result in line with prospectus, but I just wanted to focus on that 13% car churn. Can you just talk about how much is direct versus partner, where you see whether that's sort of elevated, what work's being done? Maybe just try and unpack that a little bit more, please.
Yes, while Toby's calling up the specific numbers of direct versus partner, we have a multi-point strategy to keep our customers happy. The dynamic in much of our purchasing in the U.S., our core market, is that the large employers we serve are mandated often by their corporate charter to go to bid sometimes every 3 years, every 5 years, or within some period. And so that introduces kind of a renewal period experience. We obviously focus on serving their needs, delivering value, proving value in the form of higher well-being, higher engagement, and lower turnover, and helping them deal with change management issues in their organization. Sometimes we grow apart from our customers, and sometimes our customers grow apart from us in terms of the core focus that we have, and that's kind of some of the root cause of the churn. We also see churn in markets that we defocus. We've been focusing more on larger enterprises. Our average deal size and average customer revenue in car has been going up over time as we have seen some churn in smaller accounts. And historically, we see the churn relatively similar and somewhat fluctuating, but relatively similar between direct accounts and channel or partner churn.
Okay, thank you. And then just in terms of, I mean, you sort of maybe touched on it a little bit, but obviously coronavirus is a focus. How are your customers responding, and do you think it has any impact on sales cycle?
We're paying very close attention to coronavirus. We do have, because it's a mobile app technology, it's in the hands of a diversified, hard-to-reach workforces around the world. We have one customer that's serving employees in 100 different countries. We believe that we're well-positioned to help our customers and help our prospects think about in the future as they adapt to changes and challenges in the market, communicating in real time with their employees. I can give you a historical example. When we had a large hurricane here in the States last year, one of our customers used our mobile technology to communicate, to help people manage shifts, to help people cover for other people who were either suffering or could not make it into work. So mobile communications is a core advantage of the Limeade technology, and so we believe we're poised to take advantage of it, although certainly our empathy and hearts go out to all the people suffering in China and around the world, as well as the disruption it's causing the world economy.
Okay, thank you.
Yeah, Tim, this is Toby. I'll just add also the fact that, we enter into typically a 3-year contractual length contract, and so, that also will have an impact on our ability to retain customers through ebbs and flows of cycles of things in the world.
Yeah, okay, thank you.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. Your next question comes from Brendan Kelly of Moelis Australia. Please go ahead.
Hi, Henry. Hi, Toby. Thanks for the update. Firstly, from me, just on the 29 new customers that you added, customers during 2019, can you just give us a sense for the composition of those customer wins and how much was the US direct wellbeing customers versus some of the new growth initiatives?
If I heard your question correctly, it's how's the competition for those? We compete, we sell versus competition. We don't name our competition, but we certainly have there are a prominent set of people who are both competing in the employee engagement and in the well-being spaces, and the composition is fairly in line with our historical composition of product lines.
Yes, Brendan, I'd just add, it was 30 net new, not 29, but also mainly still over 90% of our revenues is in the well-being. So again, the focus on large well-being customers is still key for us. It'll always continue to be the focus. But I'd say specific in Q4, we had customers that actually showcased the balanced approach. We had a couple of customers from that signed engagement contracts, communication contracts. But when you look at it from a dollar standpoint, well-being is going to always typically be a larger dollar value than the other three. But from a volume standpoint, we had a little bit more balance. And additionally, there's some balance too in the partner versus direct. Again, direct being the focus of the business, but we were able to layer on a good Q4 balance also with our partner team.
Sure, that makes sense. Thanks for that. And then just given that you did have such strong conversion in the pipeline in Q4, how's the pipeline looking now? Have you been able to replenish it? And is it still, on a looking forward basis, is it still the composition pretty heavily weighted towards the wellbeing?
We feel very strongly about our current pipeline. We feel that obviously we've reaffirmed our numbers for 2020 and feel very good about 2020 financial performance. And we're seeing a mix in our pipeline. I think it is still predominantly well-being, but I would say we're seeing a mix and significant increase in engagement opportunities in the pipeline.
Sure. That's great. Thanks for that.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. I will now give you a short moment to register your questions. There are no further questions at this time. I will now hand back to Mr. Albrecht for closing remarks.
I wish to thank everyone for joining the call today. Thank you, operator, for your guidance, and thank you all for your questions. We look forward to updating the market throughout 2020 on the progress towards our stated objectives. Thank you, and goodbye from Limeade.